Hello and welcome to the brand called You. I'm your host Sandeep Tyagi. Today, the brand we are speaking with is Rishi Kohli. Rishi is the Chief Investment Officer of Jio BlackRock Mutual Fund. He's one of the India's leading quantitative investment professionals with over 2 decades of experience in this industry. He has worked in hedge funds, systematic trading, and alternative investments for many, many years. He's an alumnus of IIT Kanpur and IIM Lucknow. He was previously CIO of hedge fund strategies at Incred and has been instrumental in launching one of the first quant hedge funds in India way back in 2007. Welcome to the podcast, The Brand Called You, Rishi.
Thanks, Sandeep, for the warm introduction and happy to be on it.
Let's start with your professional journey. You have launched the first Indian quant hedge fund way back in 2007. Now you're CIO of Jio BlackRock Mutual Fund, which most likely will end up being one of the largest, if not the largest, players in this space. What has changed in this nearly 20-year journey? How have you seen the industry evolve? And what do you see is different in the industry now than it was in 2007?
Sure. So obviously a lot has changed, but I'll briefly touch upon the global aspect and then come to the local, more Indian context, where of course there have been much more changes. Globally also quant strategies have been around for a long period of time, and that was the original motivation to start the first one in 2007, 2008. Since then, of course, the big things that happened globally were the 2008 credit crisis and then 2020 COVID, apart from different market phases in between as usual. And interestingly, different quant strategies got tested in those different tail events that happened in the markets, right? Of course, the first one, 2008, was like in my first year on the buy side, while developing systematic quant strategies. So the great learning there was that the best of managers who had been doing something with a strong track record for many years, even they said that, oh, there's been a whatever, some crazy 20 or 30x or whatever standard deviation event, and there've been new learnings, etc. It was, we were doing a lot of hit and trial. I was learning a lot of new things anyway, and that was an interesting way to get started, because you realize that however good the strategy may be, however great the people may be, however robust your process may be, there's always some new learning to happen. And of course, the tail event aspect of risk management and other things, which sometimes get either disregarded or go to the second stage rather than being the main focus, became an important part since then. And even for all other, I think, global players, I think post that there were a lot of things that happened, right, which developed the industry even globally, from a handful of strategies to multiple strategies, much more diversification, more tail risk management embedded. So a lot of those things happened globally. In India, of course, those were very early years. We didn't have much data at that time. The length and quality of back test, therefore, obviously was not necessarily as per global standards. Since then, of course, firstly, long time has gone by, and of course, that data becomes valuable because now you can do longer back tests in India. The quantity of data as well as the quality, more importantly, has increased in those years, early years, 2007 to 11 especially. I remember you didn't get a lot of the fundamental data sets very easily. What you got was not clean. So all the data cleaning and other issues were much higher then than now. So I think that has obviously improved over the years. A lot more disclosures and other things that the regulator has forced companies to do. I think that has also helped a lot in different ways for systematic and quant processes. Then, of course, talent, right? We are all dependent on talent. None of us can build funds and big businesses ourselves. So that time, of course, you could hardly hire anyone with relevant backgrounds who would be interested in the space. I think over the last 5 years, especially, that has really changed, and there's been a boom in youngsters from IITs, IIMs, other good engineering or MBA colleges coming in, wanting to have data-oriented approaches. So there is, I think, good talent, and again, both quality and quantity on the junior level. Mid level to senior level, there is still a challenge, because obviously, if there weren't many people in the 2007 to 11 12 period, then obviously you don't have that vintage. So that's still a challenge. But yeah, younger people, and of course whoever has been around for 5 6 years, would have seen different kinds of markets in the 5 6 years, pre-COVID, post-COVID, plus COVID. So at least in a shorter span also, if someone has got more experiences, then that is very valuable. And then, of course, the breadth and depth of the Indian markets has obviously increased, right? You have many more listed stocks, you have better sector coverage. Even when we look at the Nifty 500 sort of data in terms of the companies and the sectors, it is much broader now. And obviously, that breadth and depth of the market lends itself very well to a systematic and quant strategy again, right? So
Yeah.
that is drastically improved and increased as well. And the types of strategies, so obviously, again, the derivatives market has become more liquid, cash market has become more liquid and more depth, as we just discussed. So all of that means that there are many more types of strategies that you can really apply at scale now. For example, in the first few years, when I started some of these strategies on the buy side, you know, for a few years we just traded Nifty index futures because that was the only scalable thing, right?
Hmm.
So at least now you can actually go through the breadth and depth of strategies. Again, more on the equity side, because fixed income, there is nothing fancy you can do. Commodities is still developing. Apart from a handful, you can't do much. That is also more futures, no options or spot. So it's still more equity related strategies, I think, we are talking about, and what I have experience in. But within that, of course, all types of systematic and quant strategies can be done now, given the liquidity and the depth of the markets.
So pretty much everything has changed. The market has become bigger, data is available, talent is there, and scale is there. Very interesting. Um, and it's also kind of obviously interesting that BlackRock being largest asset manager in the world, and Jio and Reliance being largest company in India, this marriages, people are watching it. How do you see the difference? I know when you were working earlier, these were niche, smaller providers and new companies with small teams. Now you are heading probably the largest assembly of corporate initiative in the country. How does scale impact this business? Tell us more about. We've heard that first time in India, Aladdin is going to be brought into this. What does it mean? How does scale impact this business?
Right. No, so interestingly, since you brought up the joint venture, firstly, one sentence about the Jio BlackRock joint venture. So, the JV has come about, and this mutual fund has come about because, at some level, both the entities, as they discussed about it, about the prospects of this, they realized that data-driven, technology-enabled products is what BlackRock has globally, and the digital reach is what Jio has locally, and that becomes a very good marriage, and especially because there is that gap in the Indian markets where every mutual fund now, after so many years, may have one or two products which are bordering on systematic or quant strategies, but again, very niche, and it is more to sort of plug the gap that is there. But no one sort of completely focusing on those areas, and especially with the kind of experience and scale that BlackRock has globally. So that seemed like a good fit for the Indian markets, especially given the digital adoption that India has seen, right, over the last 5 to 10 years, where pretty much everyone is digitally savvy, using digital mediums to invest, understands data and technology very well, especially on the younger side. But even people like us, or older people, largely the adoption, the usage is much higher than any country in the world, as we've seen in various kinds of data. So that lent itself very well, and therefore the focus on this systematic approach. So obviously, what BlackRock is known for globally are passive products to begin with, being the largest asset manager globally, touching upon $13 trillion now. It's an unimaginable scale for us sitting in India. Of course, a large percentage of that 13 trillion is passive products. And therefore, I think initially, a lot of people in India had thought that maybe the joint venture will focus on only passive products. But clearly, with our recent launch on the FlexiCap side, which is based off our global SAE approach, which is systematic active equity, we have mentioned in multiple forums that we are going to have many active products, both on equity and hybrid side. Apart from the simple fixed income products, of course, but the more complex systematic quant products are going to be in the equity and hybrid space. And there are going to be a host of launches across the various mutual fund categories that are out there. And that is the most exciting part, especially for me and the core team. And there, of course, it's again very, very data driven. You mentioned about Aladdin. So, in a very simple way, Aladdin is an end-to-end integrated platform that BlackRock has obviously been developing over the last 40 years or more. And think of it like a platform which has everything integrated, from the traditional and alternative data coming onto it, the models, both the alpha models, the risk models, as well as the transaction cost models, again, sitting on it. Therefore, the data combined with that modeling, throws out the portfolios in whatever form and shape we want, whatever optimizations we want to run. That portfolio getting pushed to the trading team, dealing team, for executions in the market, getting plugged to the broker algos, institutional broker algos that we want to execute through. Those fills coming back automatically into the Aladdin system. Pre-trade, post-trade, risk compliance checks automatically happening. And again, pre-trade ops and post-trade ops processes automatically happening. And then the final fills getting pushed to the custodian. So all of this from A to Z is basically being handled within one platform very seamlessly. So that is what Aladdin is all about. And obviously, as you can imagine, that it makes the process very efficient, saves time, cost, energy, and therefore lends itself very well to scale, right? And that is why the $13 trillion, because Aladdin sort of powers that. And because it is end-to-end integrated, we have a few funds right now. We may have hundreds of funds down the line. We may have obviously much larger AUM in each of those. All of that can happen very seamlessly because of this one platform. And again, different people involved in different departments, in the entire process, can be given access to those aspects of Aladdin, right? So again, one doesn't have to have different usages of it. It just needs to be permissioning for certain parts being given to certain people and not being given to certain people. So again, becomes very, very efficient. And therefore, the scalability aspect is something that comes naturally to us because of that Aladdin platform and the BlackRock experience using it, which of course, I'm just completing 3 months now. So obviously, I'm still learning, what all Aladdin can do every day, and still getting, my hands dirty on it. But the good thing is, within the investment team that is there under me, there is a good mix of people from the local Indian markets and people who have actually moved from the BlackRock structure, whether in the BlackRock India team supporting global investment teams, or some of them from global investment teams who've relocated back to India because of family reasons. So there is that good mix. So therefore, obviously, a lot of the investment team is very used to using Aladdin for all the investment processes, and they are helping the rest of the team, get up to speed. So that is about the usage of Aladdin and everything. And then, of course, the models, there are lots of interesting model strategies that BlackRock has globally, not only in US and developed markets, but in a lot of emerging markets and single country markets like China and Japan, which have their own nuances similar to India. So again, understanding those different nuances of different markets, certain types of data which is valuable for different markets and may not be there for other markets, but is important to a certain market. How to use that, why to use that. There's a lot of learning and models already out there. So even for India, while the joint venture is new, but these kind of models and data signals have been around for a long time within the BlackRock system. So the good thing is that there is a lot of this information and knowledge, that I and the team have been able to pick off immediately. And then how to use it, how to combine BlackRock's global best practices with, local insights that I and the team may have who have been working locally, is, I think, the thing to fully decipher as we go ahead.
Now, India has been a primarily and even globally a star manager system where there is a named fund manager whose unique insight into the market is a big part of what drives returns in the fund. You know, the Peter Lynch's of the world or the famous names in India that we all know about. Uh,
Yeah.
is Geo BlackRock going to be quant only and no star fund managers, or is it going to be a hybrid approach? What's going to be the story here?
So for now, the goal is to be fully systematic and quant, right? So yes, no focus on star fund managers, meaning in the traditional fundamental way. We hope over time that the star fund managers sort of concept becomes broader, where you are looking at all types of managers, where obviously the systematic quant managers come in automatically. But yeah, I think we all mean about star fund managers as to the brand pull that some of those names develop over time, and the stories that sort of can come out from a fundamental perspective which relates well to people. That concept obviously is not there. I mean, there is a need for both, I think, in the markets. India obviously has a lot more of those already traditionally. We think the time has come that the systematic and quant element really takes shape and becomes larger and more meaningful, and you have a good marriage of traditional fundamental active good funds and fund managers, and systematic quant funds and fund managers. So I think there is space for both. But yeah, India has a lot of those already. So we are focusing on the gap that is there right now, according to us, which is on the
Mm.
systematic and quant side.
Now, there is obviously the Chicago school, which says it's very difficult to beat the index, and BlackRock, obviously, globally has been a proponent of creating passive funds and scaling them. When you look at a market like India at the stage of development is it your understanding and expectation for investors to expect alpha over the index by investing in these quant strategies? And if so, of what magnitude, of what duration?
Yes, yes. So the goal for also having systematic active funds in our bouquet, starting with the recent one that we've launched, is that we believe that there is, alpha to be harnessed by some of these systematic strategies in various different ways. But we did start with simple equity index funds before that, right? So the view here is that through the digital platform, we are obviously reaching the length and breadth of the country, and that is where the Geo digital reach comes in, because between the My Geo app and the Geo Financial Services app, there is a huge percentage of India's population that is in our reach, where our messaging is going. And we do believe that there is a lot of sort of social financial impact to be had by financial inclusion of some of these people who have not invested for various reasons. So obviously anyone new to market, and our flexi cap fund launch did see a lot of new first time investors in the market. For them, obviously the index funds are a good first step. So we believe that index funds is the first step, then maybe some other factor index kind of funds, or other sectoral index funds, maybe the second step, and then more active funds, where again systematic active funds, the first one we've launched, and the few more that are in the pipeline are more steadier products, where we are focusing on more consistent alpha. And the processes we have run on those, even globally, not only in the India sort of simulations, show that you can have less volatility on your underperformance of alpha, and still reach the top quartile over a 3 year 5 year period and longer. And therefore you don't need to be the most exciting fund at any point in time to be able to reach the top quartile. Whereas in India, typically we are used to seeing that excitement before a fund reaches the top quartile, right? So there's a very different path to reaching the same endpoint. And we are seeing that this different path, which comes naturally to BlackRock globally, is something that no one is focusing on or has the background and skill set to do in India. And therefore, the first few products we are doing like that. But over time, obviously, we want to have the full bouquet of products, right? Where we would have the more, maybe potentially the more volatile ones as well. We may have more single factor active funds as well, which BlackRock doesn't do globally. They will do passive for single factor, and for multi-factor or for sector rotation, factor rotation kind of things, they will have more active products. We would potentially over time have active products on all types of systematic and quant strategies. So that is the different play. Passive will always be there because, like I said, the first one or two steps for any new investor should be those to begin with.
Interesting. One last question on the professional side before we move to personal. When you look at different components, we have data we talked about, we have the market itself, the breadth of the type of market, what state it is in. India is different than US. Then the data available within it, then the type of intelligence or the models being built in there. And maybe the last part I would say is just the operations, handling corporate actions, executing it well, slippages,
Hmm.
costs. If I break it into these four buckets, what type of market it is, what type of data do you have access to, what models you built, and what operations you run, uh, how would you think that the alpha returns that the funds would generate in your organization, where would the value come from primarily, or is it all equal in your mind?
So I think the data and the models are, more important than the other aspects. Obviously, the operations, I think, is less talked about, less focused on, but ends up becoming the most important because, any small slip ups there can, impact the best models as well. So that becomes like an overarching theme. But given that we have Aladdin, we will have a good operational team which understands the traditional operational processes anyway. Plus, using Aladdin, those become more efficient. So I'm discounting that a little bit from that aspect. But obviously, the data and the models is where I think, like I said, slightly newer approaches, newer ways of thinking about systematic quant approaches is what we figured is the gap in India compared to what BlackRock does globally. So that is where I would say the value add would come from. Just to give you a very simple and high level example of that is data. For example, we have the traditional data we use on the fundamentals and earnings and quality value, all of that, and then we have alternative data that we use as well. And that I believe is not very common, not very easy to get, not very easy to analyze all of that in the Indian context as of now. BlackRock has had Indian alternative data for many years and sort of been building that from simple and lower number of signals to a larger and more complex number of signals. And we are in what we call, even on the LLM sort of textual models, we are on version 10 compared to version 2, many years back. So there's been a lot of development on that side, and that is something new for me as well, of course, because I'm by no means an expert in that area. But I'm seeing that BlackRock is operating at a very different level compared to what we've been doing in India on some of those aspects. And currently, also the FlexiCap model, for example, 20% of the data being used there is alternative data, which is a decent percentage already. Globally, some of these funds have 40-50% alternative data as well. So that is a very interesting thing and a clear differentiator, and in our understanding, going to be a big value add over time as we launch other funds as well. And then the modeling aspect, simple thing there is that we have the alpha scores, which is your relative return expectations of stocks, your risk scores on each stock, and your transaction cost model on each stock, all three going into an optimizer which throws out the portfolio of stocks and weightages, which is very unusual and very different from typically how portfolios are constructed in India, whether traditional or quant. Because here, typically, you're used to creating the portfolio and then worrying about the risk and the cost and figuring that out. But all of it going in together and throwing it out and being optimized and then focusing on the information ratio and not only the returns or the alpha is again a very, very different approach. I think those two, three things in combination is where I'm seeing the value lying really.
Thank you. Let's move to your personal story, Rishi. Where were you born? What was the early childhood like, and some of your biggest influences as a child?
Sure, yeah. So I was actually born in Durgapur in West Bengal. Not many people are aware about that because my entire schooling was in Calcutta. And since that's obviously a larger city, which everyone knows, if someone asks where I'm born and brought up, I just say Calcutta, right? So, but yeah, since we are discussing everything at length. Important to say that I was born in Durgapur. I was less than a year old when we came to Calcutta. And Durgapur, because my dad was working in Durgapur steel plant, I think in those years, uh, even when I bump into people randomly and they say they were, born in Durgapur in and around the years that I was born, then typically it's because their, parents were working in Durgapur steel plant. So that's how I was there. And then for many years, for 25 years, my father was working in Calcutta. So that's how my entire schooling happened there. Originally, parents, my wife are from Delhi. So all close relatives were always based out of Delhi and around Delhi, Gurgaon, and around. So my holidays, always summer holidays, winter holidays used to be Delhi. And then, we would go somewhere for a short trip from there. But I've never stayed for long periods in and around Delhi. That's always been like a holiday home for me. And otherwise, early influences, meaning that, in Calcutta, typically, obviously, a lot of us, joke about it as well, that generally the culture in West Bengal and generally for Bengalis is quite relaxed. Their work timings are shorter. People will come late, go early, kind of thing, but they're very happy, very relaxed in life otherwise. So that obviously, there will be some rub off of that. So the rub off
Uh,
of that is that, typically I will be very relaxed and, not get too stressed or tensed about things very easily. That does help in systematic and quant field, I think, largely. So
yes.
that is not, by design, that just happened by nature. And I was lucky to, have that development, which has helped a lot.
And what is one personality trait that you adopted, imbibed from your father and your mother?
Yeah, so I think focus on discipline. I think both my father and mother had a very disciplined, meaning not to the extent of being like over disciplined in some sense, but you know trying to do everything, being more well rounded and having discipline and some time management, part of the daily routine. I think some of those features came from both my parents. And my dad especially was very particular that, whether there's an exam or any other thing, you need to have those 1 or 2 hours out in the evening, no matter what, either playing some sports, or if you're too tired, just, walk around the neighborhood or cycle or do something, get a change of air, get some fresh air and come back, which really grew on me. And I saw the value of that, over time. So some of these things came from my parents. Love of numbers, of course, came more naturally, although my father was also, had a love for maths and was an engineer. So, some of that did come from him as well, I think, just naturally. But the other things were, yeah, things that I learned from my parents.
We all obviously celebrate your successes, which are numerous, which we enumerated, but get shaped by some of our failures. If you were to look at your journey and look at some instance where something didn't work out as you had anticipated, tell us
Yeah.
about that and how did it shape your journey?
Yeah. So from earlier days, right? So some interesting stories are there in this. So, for example, even in school in 11th and 12th, just because I liked maths and physics, and some of my core friend group was preparing for the IIT JEE exams, natural affiliation was that, yes, let's prepare for IIT and try and crack that. And obviously, there's a good feeling about being able to do that if you're able to crack it successfully. Interestingly, my father did say that, you may be a better fit in either commerce or something to do with, accounts and those kind of numbers. And as sometimes happens in those years, I just dismissed him and I said, no, no, I have a love for maths and physics, and this is what, everyone does. So in my case, it was the reverse. In a lot of cases, 20,
Mm.
30, 40 years back, 50 years back, people would parents would force, kids to go in the engineering and doctor line just because that was safer and more lucrative. But in my case, I think my dad understood me well and actually had suggested the right thing. But I thought, no, I was better suited, and I did crack IIT. I went to IIT Kanpur, but after the first year, I knew that I did not want to do engineering. And I did not want to do software engineering. So if you're not going to do your core engineering, I was in mechanical. Then of course at IIT, everyone learns to code, and that is the other way to go. But while I was good at coding, it did not appeal to me as something I would always want to do and mainly do that, right? So then the question was, what do I do now? So I had a lot of fun in the next 3 years in IIT, but then I had to prepare for CAT exams to give my MBA, because that seemed like a natural way out. That give your MBA, go there, and then see the various branches, and then figure out, what you want to do. So there itself, there was that wrong decision sort of being taken, but obviously I did not realize at that point. Then again, post my MBA, when I was having my
Sorry, what was
interviews.
the wrong decision? Having too much fun in college? I didn't get what was the wrong decision.
No, having fun was all good, and those experiences really help over time, I think. And
Right.
in IIT, of course, you have a very wide range of people coming from different parts of the country, and
Mm.
I found those experiences very, very valuable, from different social strata, different experiences. That is something I love even till today. I like meeting people and soaking up the different experiences and sort of learning from their experiences. I think there's a lot of experience, shortening the learning curve that you can do by that. So that is something I started picking up from there. But what I meant to say was that instead of going to IIT, going that commerce route, which my dad had
Okay,
suggested,
commerce. Got it. Okay.
may have been a better idea in hindsight, because finally I did my MBA and realized that, okay, MBA finance is what I like, and then went to finance, right? So there was a shorter and easier way of doing that in
Sure.
hindsight, I would say. And then post the MBA also, when I was having my campus placement interviews, uh, ICICI Securities was one of the better. I mean, overall, ICICI Bank was one of the better finance jobs that one could get. And in fact, I had my interview with Kalpana Morparia, who's very well known. And she said after the interview, it went really well. She said I was a perfect fit for the treasury. And I kept insisting that no, I want to go to the investment banking side, which is ICICI Securities. And she kept trying to convince me, and I would not agree. And then she said that, okay, there is a lady who's come from ICICI Securities. Since you're so clear on this and the fact that you want to do M&A and deals like that, I'll make you meet her. So I met that lady who was my first boss, Samira, and she selected me for ICICI Securities. But again, within 2-3 months of the job, I said, okay, this entails a lot of presentations and beautification of presentations, and this is not something I had thought is what M&A deal making would be like. And luckily, ICICI Securities was one of the first institutional brokers to start doing derivatives, which was very new in India at that time. And they needed the junior freshers to help in research, and we were rotating one by one across that role. And when I got it, I had an interest in derivatives from my MBA days. I tried to do some research in weather derivatives and all. So I like the practical aspect of that work, and luckily, my boss who had started that desk there, he liked me. So I didn't have to go through that 1 year of experience across the investment bank. They offered me to move into the derivatives desk full time, and I did that. So that ended up being a little lucky, where I saved some time. But there again, initially, my decision or my thinking that I would like investment banking was completely incorrect. But there was a good ending to it, that I went to derivatives. I liked it, and I'm kept doing things related to that even till today. So it all worked out. And then one thing in early years on the institutional broking side is, which shaped this whole systematic quant journey post that is, in 2004, very early, even again in 2006, you had these out of the blue market crashes, where markets just came down 20-30% overnight for no reason within a raging bull market. And again, the best of fund managers, best of analysts at that time, had no clue about why that was happening. So either it was happening due to events. Obviously 2004 was more because of the elections. 2006 was in general out of the blue. 2007 again because of the P note thing, Chidambaram announcing one day that they would be banned, and then the next day it would not be banned. You had these down circuits and up circuits on alternate days. So you had a lot of these weird market movements in those years, while overall point to point looking like a great bull market and very smooth journey. Actually, it wasn't in some of those years. And that set me thinking that, why aren't there products in India which can't make money in such volatility or such down moves. And that is where the whole ideas about long short strategies or more hedge fund strategies or using more data and more risk management for creating strategies really came in. But the first time it happened in 2004 out of the blue was like, the whole world is, I mean, the entire India is going to the dumps. The best fund managers don't know what really happened. So that wasn't my professional failure, but again, it was something like, okay, the whole industry doesn't know what they're doing. I mean, there has to be some things, that can be created which can handle this better. So
Mhm.
there's a mix of some personal and some
Sure.
professional things that I learned in the initial years.
Well, look, if your failures are going to IIT and going to iBanking at ICICI, may your career always flourish like that. What a story. Um, who has been a mentor for you? You mentioned some names already, but somebody you worked for or industry personal who helped shape who you are as a professional today.
Yes, thanks for asking that because I mean, in personal and smaller group conversations, I have mentioned about him, but not on a podcast or an interview. And I think due credit is there. So my this as I mentioned, at ISEC, once I moved into the derivatives desk. So my boss was a person called Anil Desai, and he had actually uh, managed a family office in the Middle East, a large family office, and had traded US options and global options markets and derivative markets. But for family reasons, he was moving back to India, and that is when Indian equity derivatives market was starting. So ISEC offered him to, come there and lead that desk. And I hit it off personally well with him. We gelled well at a personal level. But again, as I said, he was testing us flunkies out, doing some basic research. And again, that I was interested in. He liked what I was doing. So I joined him, and I would give him a lot of credit in terms of giving me a lot of extra responsibility, in the early years, which normally is not so easy in larger organizations, right? And given that it was very new for the Indian markets, it was very new for me. He just thrust me into everything, kept me as a backup on everything that he was doing or the small team. Obviously, the team was small, so he needed help as well. But having said that, I think given my knowledge and the phase of my career, there was a lot of extra responsibilities he gave me to be his backup on the sales side. Any troubleshooting, if he's not around, I could take the lead, giving me a lot of freedom in the kind of quant derivatives research that I could, write about. A lot of technical analysis in the initial years I did, and I was trying to marry it with some derivative indicators, which is not so common, which was not so common at that point in time. He understood the derivatives aspects very well, but not the technical analysis, but still encouraged me to go ahead and design something new for the Indian markets. And then on the media sides, obviously, he being among the very few people who had seen global derivative markets, all the media channels would invite him to speak. But then he was like, okay, you also understanding certain things which they want to learn about. So why don't you also go and speak? So very early on, he introduced me to some of these kind of interactions. I don't think any of those aspects is very easy for any boss to start doing with a younger, fresher person, especially when a field is so new to the country, right? So a lot of those things I think really helped. He gave me a lot of trader thumb rules just because of having traded US markets, having met and interacted with a lot of the large traders there. Things like in a debit call spread or any debit option spread, 1:1 call spread, put spread. Typically traders will not pay for it unless they have at least a 3:1 kind of reward is to risk. So things that we take for granted now, but when markets are just starting and people don't even know much about options, forget about option spreads and other things. These are interesting thumb rules to get, from someone experienced. And then as you understand the theory and the practical aspects, then you relate that to some of these thumb rules and then understand, okay, what is happening here. So a
Very
lot of
interesting.
that was, shaped by Anil, who over time became a good friend. So, we are in very good touch now as well. He's retired now, but uh, catching up with him and exchanging ideas and thoughts, whether professional or personal, is still very, very exciting.
Okay. Um, you have a Big job, I'm sure a lot of pressure. What do you do to keep your mental peace and equilibrium?
So, as I briefly said earlier, not take yourself too seriously at work as well. Mix some humor, some emotion, some cheerfulness in the team in between all the serious work. I think that helps keep the atmosphere light within the team as well, and just helps me, get relieved a little bit. So, in general, that has been the motto, whether at work or at home. At home, also with my daughter, who's in 10th standard right now. I just have one daughter. So, there's a lot of humor that goes around at home, and some interesting stories that we discuss. So all of that really helps me. And then, of course, like I said, grew up in Calcutta, so a little bit of those habits. So if on a weekend I'm completely free, the family is busy, and I don't feel like reading a book or watching TV, which are some of the ways I would unwind. Uh, I would just have a short nap for an hour or two, and that really helps you, get your energy back, not feel tired, get a lot of perspective back, both on personal side as well, apart from professional. So some of those simple things in life, I think, are things that people forget now. Everyone wants to pack in too much into their day, and even when you're at home, people typically want to have milestones even there, whether you're playing a sport or doing other things somehow. And that is obviously my personal view. I used to be an athlete in school, used to play soccer. So till my IIT years, I was very, very active physically. Over the last 10, 12 years, that has gone down quite a bit. I think it's gone down more than I would like. So I would like to pick it up a little bit. But I do feel that in general, I think 80-90% people, have started taking all that too seriously and packing their entire day with something or the other that they want to get an achievement in. I think it's important to just get a few hours out and not really be doing much, and getting that break from, this sort of objectivity, that comes up in everything that we are doing.
So to relax, you just relax. That's good.
Yeah.
Uh, tell me something about what you're passionate about besides, work and family.
So, social impact appeals to me, social environmental impact, and obviously not got as much time and opportunity to dabble in it to the extent I would like to. I would like to increase that engagement over the years, but in my own small way, starting with helping some friends, startups which were focusing in some of those areas, or investing in some of those over time now as some liquidity came up. Those kind of things do appeal to me. My mother had passed away by cancer many years back. Very close, one of my best friends from school passed away last year from cancer. So cancer related things are again things I've been active in. I've tried to help early stage, breast cancer device company in the past, just flesh out the business plan, also do corporate camps, as a volunteer and later as an investor, as I mentioned. Currently, also, there's a very interesting cancer research company which is doing some very innovative, cutting edge stuff for India, getting some global latest technologies to India for cancer. So trying to help them also get connected to the right people, just to flesh out the plan. So things like that are important for me. And then, of course, something about, and again, people may say it's that is slightly related to work, but again, started as a non-profit, the Quant Association, Laksa. So I'm very passionate about that, as you've briefly seen. And the reason for that is not related to my work. I mean, of course, my learning increases every time I meet new people and listen to new topics and new discussions in those events and forums. But also seeing the energy and the younger people, coming into the space, that is very, very encouraging for me. And I think, as we discussed in the beginning, that over time, all of this is going to become very important for the country's ecosystem on the public market side. So, developing that ecosystem and encouraging that from the younger people and spreading that learning and education and awareness, all of that is very important. So, I think that, is something that I envisage doing even when I don't want to be, in the front end of things. I think that is something I would love to continue doing till very late. And that was the whole motivation behind starting it also. So a
Hmm.
little bit is the social environmental impact, and a little bit is this outside work.
Okay. Okay. Well, we are to the last section, which is our rapid fire. So these are brief 1 to 2 word answers. One book you always recommend.
Thinking Fast and Slow by Daniel Kahneman.
A habit you credit for your success.
Perseverance and time management.
Um, Biggest concern you have about the world.
Um, Becoming inward looking over the last few years, um, unlike earlier. So the quick example is credit crisis of 2008. There was a lot of global coordinated central bank action all across the world, but last few years, the way the world is developing, all countries are becoming very inward looking. So the problem is the next crisis, I don't know what's going to happen. It may be much worse than anyone would expect. And the overall geopolitical and human fallouts of that is something, I mean, I can't fathom. So that is like my worst fear.
Your favorite meal.
Favorite meal, I mean, lots of favorite meals. I'm a foodie, so but non-veg for sure. I'm a hardcore non-veg, but yeah, lots of things on that, from sushi to Chinese to Indian. I love a lot of dishes.
Who's your favorite actress?
Favorite actress. Um, Deepika Padukone.
um, if you have a free afternoon, what do you do?
Sleep, as I said earlier.
Take it easy. This has been wonderful, Rishi. The very last question. What is brand Rishi Kohli in your own words?
Yeah, so let me know if the way I think about brand Rishi Kohli is combining the values of consistency, integrity, discipline, tenacity with a lot of cheerfulness while being logical and data driven to create market firsts.
Well, that's very well said. There you have it. The brand we spoke to today, Rishi Kohli, who in a humorous, light-hearted way is able to combine all the dry subjects in the world like math and logic and systematic investments and deliver something for the global investment opportunities to the Indian market. Thank you so much for speaking with us, Rishi.
Thanks, Sandeep. It was a pleasure. Great talking to you.
Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the brand called You.